Hey guys, it's me again, Alad, and I wanted to talk to you about managing risk in investments and in the stock market. Managing risk is highly important. If you don't manage the risk right in your investments, you're going to lose a lot of money. This is especially true for these days when the stock market valuation is very high. Yes, the AI is a game changer. Yes, the AI is the biggest advancement in the last century. At the same time, you must realize the risk in the stock market are going up and up and increasing every day. If you don't manage your portfolio and your investments properly, you're going to get hit hard. I don't know when the crash is going to happen. Nobody knows. I'm not a prophet, and anyone who tells you this can happen in a month, in a day, or in 4 or 5 years. But currently, the valuations of the S&P 500 and the Nasdaq and all these companies that you see are very high. Yes, the AI helps them; they're more productive. Yet, keep in mind that the pricing and the valuations are very high these days. In order to manage the risk properly, you have to make sure you're diversified. You have to make sure that you take risk as much as you can sustain. Most of you, or I don't know if most of you, but did not experience the crash of 2008, the crash of 2000 that was the dot com, then 2008 was the real estate. So you have to understand the risk here is the risk that we're facing these days are very high. Yes, for the last 15 years, the Fed, the Federal Reserve, was supporting these stock markets by printing more money and more money. For most of the time, inflation was controlled. Recent years, inflation got out of control, and nobody knows what will happen next. What I can assure you is valuations are very high. You have to be very careful. Again, this is not a financial advisement. I used to be a financial advisor and I have a lot of knowledge in the stock market. Yet, you have to understand the risk is high. Not a financial advisor, each one of you has to think and be careful of what it's doing. What I suggest all of you is to use all the tools, all the knowledge that you can get these days. To prove my point, what I'm trying to say is that if you listen these days to bigger investors, not me, like Ray Dalio, Paul Theodore Jones, uh, many other investors, famous, well known, they will tell you the risks are increasing. And you have to be prepared and you have to make sure your portfolio is prepared. Let me share with you some data because talking about this is nice, but I want to show you the numbers. So if we look at what I'm showing now is that the Shiller PE ratio. Okay, so let me explain you briefly what that means. What is this metrics means? This takes basically the S&P 500 index, which are the 500 largest companies in the US. And it's taking their earnings and comparing them to their price. Meaning I want to see the ratio between how much the company earns versus its price. If the price is much higher than its earnings, then we expect it either to go in earnings much more, otherwise it might be overpriced. So in this example, I took the Shiller PE ratio, which the Shiller PE ratio is a metric invented by Robert Shiller, Price Nobel economist, who actually said, okay, I want to make sure that we smooth out these pricing and earnings. And what it's doing, it's taking 10-year average, including inflation, because inflation can be high or low. So this is by far the most accurate metric that we have. This is more accurate than the regular PE ratio because this smooths out all the data and takes into consideration the inflation. As you can see now, the price, the PE ratio these days are higher than 2008. 2008 to tell you this is the crash, okay, when the real estate bubble collapsed with Freddie Mae, Fannie Mae, and all of that. And you can see that the pricing now is extremely high. almost compared to the 2099, let's say, where the market crashed from .com. So in my perspective, what we're seeing these days is that, again, like the internet bubble, there was a very hype and pretty high valuations. Some are adjusted, some are really justified, some are not. Some companies obviously will get this the crisis that will have again, nobody knows. They will come out very strong. Some will just gonna go bankrupt. Now nobody really knows what will happen. Obviously, the larger the company is, the most likely it will survive and survive well, and come out of this crisis pretty good. Yet you have to understand these valuations are just telling us and alerting us that the price is high. If you see Warren Buffett, the amount of money in cash he holds is just enormous. It's compared to no other time of period where he had so much money in cash. Now Warren Buffett obviously is a smart guy. He's losing a lot of money, but not participating in this whole party of stocks going up. But for the last, I believe, about 2 years, he's piling in a lot of cash and he's just not participating. Now you have to ask yourself, why is he doing that? He's very careful because he understands that there is not much value these days and prices are very high. So this is what I wanted to show you. Here is another example of what's happening these days. So if you look at the current, if we see actual numbers and not just the graph, we see that today we're standing at 42 PE ratio Schiller, and the mean was 17, so we're much higher. The median 16, and the max was 44. So, well, right now we're pretty max. That doesn't mean tomorrow is going to be a crash. I don't know when the crash happens. Nobody knows. The crash may never come. Unlikely, but it may never come. I do think that the stock market is going to do some kind of reset. I don't know if this is going to be a correction of 20%, which is healthy, and this happens a lot, or this might be a big drop that will happen. So if you like this movie, just subscribe to my channel, and I'll keep updating you here with all the things that are just coming out. And just subscribe and like this video. Thank you.